What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is November 30th of 2020. Well, folks, I hope you are having a fantastic day wherever you are, and in today's quick update, we're going to be spending some time to talk about how Bitcoin can be stealing the stage from gold as the world reserve store of value, and along with that as well, talking about not underestimating the coming altcoin cycle. We've got lots of things to discuss. Let's go ahead and dive straight into it. So starting off as per usual, taking a look over the last 24 hours, the vast majority of cryptocurrencies here in neutral territory over the last 24 hours. However, at the same time, we have more favored in the green here, and a lot of DeFi plays starting to pick up in the broader altcoin space, like Aave, Synthetics, and one of our big plays, Ampleforth, as well as Yearn Finance, SushiSwap, Uniswap. Again, seeing a lot of DeFi leading the way, and Ethereum following right behind, up 8% over the last 24 hours. Now, I want to go ahead here and start by talking about the recovery in Bitcoin. There's a lot of kind of theories going around, not only from analyzing previous price history, but also just people exchanging their opinions from what they're picking up in the sense of price action and technical analysis and fundamentals about how Bitcoin should go about working in the sense of its price over the next couple of weeks or months. Can we break out above 20K here in the next few days, or is it going to be a consolidation process to the side? I think this is a really interesting question, but the key thing here that I want to focus on is the sheer amount of recovery that we've seen over the last few days. After what was the most stark decline that we've seen in Bitcoin for the last few months, all the way back towards early September, where we saw a 10%, more than 10% decline in one day, and previously an over 4.4% decline. We've been able to recover practically all of those losses from the past two sell-off days in just the last 3 days alone. We're already nearly back, as we're doing the video right now, almost back up to $19,000 per Bitcoin, when we had declined all the way down to 16,200. A lot of people had theorized that we were going to see a more starker correction, that people wouldn't be buying dips this vigorously, but it's happening. People are buying it up. The market is seeing prices go higher. Now, the important thing that I would like to mention, this is why I'm a bit of a skeptic that I think we're going to not per se smash through 20K anytime soon here over the next few days. It's more likely in the next few weeks, the next few months going in towards the close of the year, towards early Q1 of 2021. The reason I think that that's much more likely is because of the volume here. Being fair and not per se being bearish, but just being conservative in our estimations, volume here is not that strong. And it's not just here on Bitstamp. That's an important thing to keep in mind. We have to take a look at the broader exchanges. And the best way to do this is taking a look at BLX, which is aggregating the price history of all the major exchanges and including their volume in the metrics. So we'll take a look over the last 2 days. We don't have today's metrics yet. We'll take a look over the last 2 days. A very similar pattern to Bitstamp. Right? Nowhere near the kind of buy-side volume we were seeing here, where we were having days of 80,000 Bitcoin being traded, roughly speaking. Here's some of these big peak days. Now we're seeing days where we're doing 30 to 24,000 Bitcoin. It's not to say that the price action isn't completely justified, but more volume on the buy side will again solidify this price action. We tend to see that when we get these big spikes in volume, price holds, right? We get one of these moves. It doesn't even come down and retest after we get these kind of buy orders coming in, right? We have another big spike here, right? Price action pushes sideways, but doesn't come down to those lows. Here, along with that as well, we again get another big buy side day, continue through and follow through on price. That's what we want to see here. Now, again, above all, though, I want to go ahead and take a step back here and talk about a very critical thing now that we've done some price analysis here in the short term. A lot of people out there in the crypto space, myself included, really do see Bitcoin and cryptocurrencies alike as potential new age stores of value in the market, and possibly many other things as forms of money or possibly utility tokens to fuel decentralized systems. But I want to go ahead and focus solely here on Bitcoin and talk a little bit about how it could be a competitor to Bitcoin, Bitcoin being a competitor to Bitcoin. Look at me go. I need some coffee. It's early. But Bitcoin being a long-term competitor with gold. I'm not one to really spark this debate much. I've had conversations with people like Peter Schiff, who in this case believe that Bitcoin is worth nothing. I, on the other hand, believe that gold has a place in this world. Just because there's going to be digital currencies does not mean that gold is not going to be relevant, whether it's in the store of value properties that it holds, which give it the majority of its value, or the small niche scenarios where gold can be used as an industrial commodity. I see the value in both of those things. But I have to say that Bitcoin's actual data that we can work with right now is showcasing that through its supply schedule, as well as its finite supply and its general censorship resistance, gives it the perfect traits to be a new age store of value in the digital economy. And we're seeing this through the growth long term over the last decade in the hodl waves for Bitcoin. Right? Even as the market price has revisited back to the all-time highs here, right? Again, during this period of time, we already started to see a decline last time around. This is very normal to see. And in fact, the decline has been quite small. We've only seen a percentage decline so far. Taking a step back, though, towards probably the most important metric, as I talk about a lot on my channel, markets are about inflows and outflows. And there's something really interesting going on in gold markets right now. This article here, put out by Joseph Young here, is titled, Record Gold Outflow Isn't Going into Ripples, Only Bitcoin Says Fund Manager. Now, I don't really want to per se focus on altcoins or Bitcoin in this case. That's not really where I think the substance lies in this topic of discussion. It has a lot to do with understanding the inflows and outflows into major markets across the world and what kind of signals this is sending. We just had our largest weekly outflow of gold funds in history. The biggest dollar volume that we have seen flowing out of gold funds, over in this case somewhere between $4 to $5 billion. That's a lot of money to move in 1 week out of funds as a net loss for gold funds. It's a huge hit. So where is this money going? Where are people moving their capital? Who's selling in this case? There's a lot of great questions to ask. But it doesn't really matter in this case because, to be honest, we will never really know right now at the moment who sold this. And in many cases, it might not matter. The question here that I think would matter or would be relevant for us to ask is, where's that money going to? Well, as gold here, as we can see very clearly, has been declining over the last couple of days. It's been sharply correcting here over the last 4 weeks, going from a little bit below $2,000 an ounce down to $1,768. And it looks like it's continuing to decline. This is far beyond actually the support range here that we were looking for gold to hold on, to be fair. We were hoping it would actually be a bit more optimistic. Gold's been declining, and it's been flowing into two major markets. Equities, to be fair, have stolen the majority of the show. Most of this capital, realistically, is going into equities. But the second portion, that's not equities, is cryptocurrencies. I truly believe confidently we are seeing the telltale signs of this. When you see gold, for example, declining or remaining stagnant in a period of time where Bitcoin, on the other hand, is soaring to its all-time highs and picking up momentum and serving as the best performing asset of 2020 as a whole, and all the institutional interest is starting to come around it, and the financial products are getting developed, and PayPal and Square are offering you an ability to buy Bitcoin but not fractionalized digital representations of gold, well, you start to get the picture here. People start to reallocate capital. They start to get prepared to cycle into new assets. This isn't a far-out idea, guys. The important thing to realize, and as I've emphasized this before, it's not only considering things like market to scale. These are what institutional investors are considering. Bitcoin has a lot more likelihood of doubling in the next year versus gold. But along with this, the important thing is that a lot of the stuff that we aren't seeing, right, the stuff that we would hope to see in the headlines and the developments, it's all going on behind the scenes. There are companies, major banks and financial institutions that are preparing for this storm that's going to happen when we break and start climbing above 20K, whenever that is. And it's because of a lot of fundamental macro factors. And if you really consider, in this case, gold is not performing that well. It isn't, the ultimate store of value as we see with Bitcoin. So there's a lot of value locked up in those markets, and a lot of paper wealth as well that's looking to actually go into something where they can have autonomous ownership over those assets. But there's also an even bigger problem: the negative yielding bond market, something we have been hitting on for the last 2 years on this channel. Last 2 years, back since the summer and fall of 2018. $17 trillion are currently taking on a negative yield. And if we consider the real yield in this case, considering inflation, it's tens of trillions of dollars across the globe, pushing probably towards 100 trillion soon enough, that are being penalized for holding these treasuries. What happens when even 1 to 2% of that market share sells off and goes into crypto? Anyways, I can really get caught up in the big picture sometimes, guys. I think above all, this is really substantial stuff. It's not what you're seeing, to be fair, and the kind of major publications out there, whether it be the crypto news sites like CoinDesk or Cointelegraph, and it's probably not what you're seeing even in the big page, big page media companies like Bloomberg or Yahoo Finance. But this is really what's going on behind the scenes. This is what's setting up for the next 2 years. This is what's going to provide the liquidity that's necessary to bring Bitcoin to prices like 100,000 to 200,000 per Bitcoin. You expect ETH to go to $10,000? Well, the only way it's going to do that is if DeFi can capture a lot of the value from these traditional financial markets and build better financial services and open up access to more people and more liquidity. Now, one thing that I want to emphasize as well, going back to the headline of this article, I think it's a big misconception here, that all this money is just going to go to Bitcoin. Whether you're talking about institutional money or you're talking about retail money, it really doesn't matter. I don't think that capital across the board is going to discriminate against altcoins. And quite frankly, the price action we're seeing right now completely goes against any assumption that that's the case, that funds are completely against the idea of holding Bitcoin to any degree. Ethereum has spiked back up to its relative levels back in late October, canceling out a month's worth of negative price action in just a couple of days and holding the vast majority of those gains. XRP went high enough here to close out a year's worth of losses against Bitcoin, seeing some of its highest volume here on Binance that it's set in history. 3.6 billion XRP tokens exchanged in the last week, more than we bought back here, more than twice as much during some of the peak weeks here in December of 2017. And last but not least, altcoin dominance. Wedging in here, holding the vast majority of the gains here, leaping up from around 32% all the way up to a peak here of 39% in just a couple of days. I know where I'm betting in this case. It's in crypto markets. I own some Bitcoin. I love Bitcoin as an asset. But to bet for a moment that, considering markets of scale, the lower liquidity requirement to double or triple its price, the sheer fact in this case that altcoins have different value propositions, are building real applications, are finally finding their real market and their value proposition, their unique selling proposition. To not have a bit of your portfolio in altcoins, to me, seems a bit foolish and biased. Just like how it would be to have all your money in altcoins and to be betting against Bitcoin, or to be a no-coiner in this case and have no cryptocurrencies. Anyways, above all, guys, I've rambled on a bit today. I want to ask a few things, though. If you enjoyed this video, please consider liking. It really helps out the channel when you guys do that. And along with that as well, leaving a comment down below, as well as subscribing and hitting the bell icon if you haven't already. And if you're just looking to get started in crypto, you can check out Digifox. You can swap into over 50 different altcoins. You can start earning interest on a lot of those cryptos, as well as stable coins. So if you have dollars in your bank, you can shift them over to Digifox and start earning 10% interest on your dollars. Not bad. And along with that as well, if you guys want to get some more in-depth research and are excited to learn more about markets, we've got our Dash Report newsletter that's going to be dropping tomorrow. So I would recommend not signing up for it just yet, but if you want, set a reminder in this case for tomorrow when we start the new month. We've got a really big report coming that's going to dive in how to prepare for this altcoin cycle. It's going to be talking about my top 3 picks for the month. That's going to be diving into the other markets that we talk about, such as equities, commodities, as well as Forex. We give a whole full suite 360 view of financial markets in the Dash report, and it's at a really good price. It's only $30 a month, or in this case, if I remember correctly, if you do the annual, it's about $25 to $20 a month. So anyways, guys, that's it for today's video. Thank you all so much for watching. I hope you are having a fantastic day wherever you are, and I'll see you all in the next one. Take care, everyone.